Today is going to be a very, very interesting episode of The Future of Freight. Over the past couple of episodes, we've dived into a couple of different aspects of global freight. And it's really been across the board, from getting a little nitty-gritty on air rate management, up to speaking to Alibaba, Johnson & Johnson, some large ocean liners, the former CTO at Maersk. And we've gotten a very interesting idea of how different companies at different levels of global supply chains are dealing with the changes in global freight, a little bit on how they're dealing with changes on the technology, and particularly on the COVID technology side. And it kind of, I walked out of the last webinar that we did thinking, hey, we've spoken so much about how large logistics companies are attacking these problems and how technology companies are attaching these problems. But there is another very active player across this technology space that is there and very, very present. And I think for me, the best reminder of that, we were at a Freightos company day a couple of years ago. And towards the end of the day, people were shooting messages between themselves. And we saw that SoftBank had just announced this massive round in Flexport. And we all kind of looked at each other and said, what do you do when there's so much money in a technology play in global freight? And we were certainly not the only people that were a little bit surprised and were raising our eyebrows. And we're a tech company and we're raising our eyebrows. So wondering how a logistics company or industry player approaches that is a completely different story. And I really wanted to introduce into this conversation the VC perspective on global logistics, technology and logistics, and how it's been evolving over the past couple of years. So our guest today is Santosh Sankar, a partner at Dynamo Ventures. Santosh, thank you so much for coming today.
Yeah, thanks for having me here. Appreciate you providing that great intro, and hopefully can follow in the footsteps of some of those great prior guests. But I'm Santosh. I'm a partner here at Dynamo Ventures, and we are a sector specialist. So our investments encompass early stage businesses in supply chain and mobility. So about 2/3 of our portfolio relates to the movement of freight or the movement of goods, and then the remaining third roughly around the movement of people. So this is a sector that we know very well. We spend our time studying it, analyzing it, and then making the right early stage seed investments behind the right types of founding teams in order to build the next industry defining or disruptive businesses.
Fantastic. And I think that's exactly, this conversation is really, what are those types of trends or the specific players that are really involved in that type of disruption. And I also think that, even the word disruption in this context is sometimes a very charged word. Definitely when you drop it into these conversations, sometimes, some people say it doesn't need to be disrupted. Some others will look at disruptors and say, hey, they're doing the exact same thing with the shiny interface. So I definitely am looking forward to unpacking that as we talk today.
Yep. Yeah, absolutely.
And just a good reminder, of course, if anybody has any questions or has any comments that they want to drop, the Q&A and the chat are definitely open. Both Santosh and I are looking forward to having an open conversation here. So let's get started. Just 1 second of context on Freightos and why we love having these conversations. The first reason is that I just really like talking about logistics and technology. I think there aren't so many people that aren't so... There are not millions of people that are very interested in this very, very particular overlap. And the deeper I go, the more interested I get. And the more I see that there's other very interested people like Santosh. Specifically at Freightos, we tend to look at these things in the shape of platforms and aggregation, and who is sitting at different layers within that communications and within the logistics supply chain. So we basically have software as a service that we sell to freight forwarders, but we also have platforms that connect freight forwarders with importers and exporters, and platforms that connect freight forwarders with carriers. And I'm hoping more so than some of the previous conversations, we'll have the opportunity to talk on what platforms are and how they're impacting global logistics. But before we get into that, I kind of wanted to start with this chart, and probably the most cliche, the cliche statistic right now that every single person has said, and probably my grandmother will say this next time I hang out with her, which is that within a couple of months, we saw e-commerce moving forward by a couple of years, at least 10 years. And that hasn't just been about people sitting at home and ordering things online. I've definitely played a role in supporting that, but the players that are making that happen, the e-commerce, whether it's Amazon, Shopify, the people that are moving the actual goods. So definitely trucking companies, but the tech companies that are behind that and supporting it. And sometimes it'll be startups like some of the startups listed here, which are primarily in the Dynamo portfolio. And I hope Santosh will talk about them a little bit. But also the technology that's in-house at large enterprise logistics providers or carriers that we all know for a fact most of what's happening today would not be possible without technology, whether it's at a large organization or coming from a startup. So I do see these two things going hand in hand. And I just want to kick this off with a very broad question that I hope will provide kind of a good landing spot for Santosh, for you to talk a little bit about the general Dynamo investment thesis. So beyond accelerated e-commerce adoption, which we all know, we all see, and it's there, how do you feel like logistics technology investments have changed, and how has that impacted your current investment thesis? That was a lot of talking.
Sure. Yeah, it feels like everybody's talking about e-commerce acceleration, but you kind of can't not talk about it, right? It's been such a driver of change across supply chain. And if you just take a step back and you think about how consumer behavior's changed, and in our perspective here, they're changing permanently. So a recent Salesforce survey polled consumers, and about 70% of them said they will permanently shift their buying behavior online for things like groceries, apparel, as well as more large discretionary purchases. And if you think that something like 21 days to build a habit, like we've all been sitting here pretty tight for 9 months. So, I mean, there are habits that are here to stay with us till a subsequent kind of shock event that forces us to adapt and evolve. But beyond that, you're seeing that mentality being pulled into more enterprise environments, right? If you think about just the B2B environment around supply chains, about 15% of B2B supply chains were really digital in any way, shape, or form when we looked up some data from Capgemini. And equally through this period, you've actually seen a lot of suppliers and buyers say, hey, we're actually going to shift our spend if we're not able to coexist or transact digitally. And quite a meaningful number from our conversations have come back and said, yeah, we've actually gone through the supplier diversification effort. And there's a major retailer in Europe who we're having a chat with. For the last 5 years, they were consolidating suppliers. And this year, they actually did an about face and they said, no. We actually need to maintain some level of complexity amongst our supplier base, because that also provides us resiliency and what I would call anti-fragility, right? As something shocks the system actually gets better. And in supply chain, a lot of that has to do with the people. We're able to respond in real time and make judgments and make decisions and take action in real time. And I think technology is enabling us to do that. So this year in our portfolio, a few things that we've seen accelerate, things in and around intercompany supply chain. So we have an investment in a company called Backbone AI, and they help trading partners manage their intercompany data automation. And on top of data automation, you could do process automation. So it ends up being you're taking this traditional workflow that was in spreadsheets, in email, on phone, and you're actually making it streamlined and automated, because there should never be this double data entry or could you give me that data request. It should be, how do we set up an API and pass it to you as a trusted partner so we could work faster and work better together in the name of the ultimate end customer.
And of course, that's something that was kind of taking place before COVID hit, but you're seeing that just take off right now. Yeah.
It's an acceleration. And if you think about a lot of the things, people in the attendee base we have seen in supply chain, a lot of these things existed. These concepts were there. They had taken root. They were developing. And this is the year they really accelerated. And if you think about, we woke up earlier this year, and folks like you and I, where we spend our time, like people didn't necessarily know what supply chain encompassed or what it really did or what it was. They just realized when they ordered something, it showed up in a specific period of time. And now, front page Wall Street Journal, right? If you look at any publication right now with the vaccine distribution ramping, supply chains are equally in the forefront of that because it's a supply chain effort.
Right.
The healthcare experts did their thing. Now it's for us supply chain people to do our thing. And that's where you're seeing an acceleration. It's not dissimilar from about a decade ago, what we've seen in financial technology. Mm-hmm. There's actually a lot of interesting parallels, equal size roughly in terms of global GDP, equal types of complexity when you think about process, existing incumbent technology, the legacy players and the influence they wield in the ecosystem. And you have these upstarts that are trying to create meaningful change and positive differences for everyone involved.
Yeah, that's interesting. I'm curious, one of the kind of frameworks that I've always had for the way technology has evolved, and particularly at supply chain companies, is that if you go back 25 years, obviously there was technology taking place 30 years, 40 years, UPCs, EDIs, right? These are all things that I think were very innovative at the time. So there always has been this level of efficiency. I think historically, technology at supply chain companies may have been a little bit more focused on internal efficiency. So how can we scale up our operations? And over the past 20 years, it's focused much more on connectivity. How can we leverage the internet? How can we leverage Bluetooth in order to interact, whether it's IoT across devices or with other companies? And I wonder if you're seeing that, possibly now that there's fewer people that can necessarily work or are stuck at home, do you feel like that's been accelerating the shift towards more tech-based communication and more of that, rather than the RPA stuff, which might be a little bit internal at a company, breaking down the silos and connecting more companies?
Yeah. Oh, absolutely. Absolutely. So we're investors in Stored, that was on the prior slide. And actually, in the back end, what Stored has in their software stack is a proprietary piece of middleware. And what that middleware does is it actually interfaces with disparate warehousing outfits, as well as your WMS as a major shipper. So they're able to actually consolidate a bunch of your warehousing supplier partners in a central control tower-like capability. And equally, you're able to shift your 3PLs and your freight across your entire warehousing network, right? And previously, that was siloed. That was siloed within your company, but that was also siloed amongst your various partners that you had across your supply chain. And what you're increasingly seeing is this ability to knock these silos down and unify them. Because at the end of the day, supply chain is a big network, right? And if you're able to truly lean into that network effect that supply chain naturally has using technology, you will see things like efficiency go up, margin per employee go up as a logistics outfit, 3PL. And at the end of the day, we're all aligned against the same thing. We want to delight customers and make them really happy, right? And provide best in class service. All of that actually comes together in the name of the customer.
Yeah, that's interesting. I guess one last question on that side, and you talked a little bit, I love that analogy of, 10 years ago in the financial crisis. Definitely these types of external impacts can take processes that are already happening and just push them forward much, much faster. I think another potential example or analogy would be if you look at World War II and the amount of tech development that happened, motion picture, color videos, right? A big part of that came from being able to track military experiments. And I'm sure we'll see this on a pharmaceutical side and just a whole bunch of new startups that are built around how do we process and create vaccinations as quickly as possible. Do you think that COVID has created any fundamentally new ideas that might not have been in process or might not have been on the radar 5 years ago, and suddenly everyone's like, oh yeah, of course, that makes sense?
Yeah, I would say we have run into some early stage founders, and we're talking some of the earliest of the early that are rethinking, how do you think about distribution? Why are we conducting last mile in this way? And an interesting company that we invested in earlier this year that brought a lot of the mentality around experimentation that you tend to see like in your world, right? In marketing, how do you run A/B tests? How do you really pressure test decision-making? And they've actually now built a simulation and decision engineering suite for supply chain. So in the physical world, how are you able to run experiments? And that could sound absolutely ridiculous. Like, how is this tried and true? But the reality is like, hey, in this type of a scenario where we need to distribute a vaccine to the entire global population, you should be able to run scenarios. You should be able to constantly run scenarios and pick the best option at any given point of time. And that's what Next Move allows one to do. So there are concepts that you're seeing, but I'm a believer where nothing's really ever truly new or novel, right? It's come in prior history, and you're drawing from history in this discussion so far, or it's coming from an adjacent industry, right? We've seen this type of thing elsewhere. How do we apply it here in this particular use case or in this industry?
Awesome. Yeah. And you know, I always try to balance between those different areas that I might be in on the marketing side or technology, and certainly on the logistics side. And this is a good segue to the next thing I want to ask about, where I certainly feel, you know, before I heard when you were talking about as a VC, you included yourself in the supply chain ecosystem, right? As you know, us in the supply chain. And I think that I certainly do as well. But I know that not everybody across the board necessarily feels that, right? So you'll have people listening into a call like this and they'll say, yes, but the same trucking company or the same trucker that was moving goods 25 years ago, he's still doing it right now. But now there's 2 or 3 layers of intermediaries in there that are talking about radical disruption, but it's still that same 20-foot container or 40-foot container. And there certainly is, from the marketing perspective, at least, a certain amount of hype when it comes to these companies. And I guess, you know, one of the biggest things, and it's hardest to unpack, and it does a huge disservice for logistics technology as a whole, is this signal noise ratio. And you know, I think at the end of the day, as a VC, you're cutting checks, right? You're really going strong on a technology company. And ideally, that means that you're not buying into the hype, and you certainly don't want to buy into hype when you make these investments. How, as somebody who is actually writing a check, how do you cut through the signal noise ratio and make sure that you're investing in the right companies?
Sure. So a reminder, we come in early. We're usually the first institutional or professional investor, right, that invests in a particular company. So there are instances where we've invested prior to a product being fully built, and that means prior to revenue. So what we end up focusing on early on, and this is also something as customers, right? A lot of your attendees might be customers or prospective customers of a venture-backed startup, is you go spend a lot of time with the team, right? Why is this team the team that's going to go build this industry-defining, this disruptive piece of software or software service that can really, you know, collapse the cost stack or allow for automation or lean into this digital wave we've seen through 2020? The benefit we have also on the market side is because we sit and we devote ourselves to this market, we can very quickly sort out if something is a thing or not, right? And if we're unsure, we could pick up the phone and call any one of our corporate friends and practically walk through the problems they're facing and why they've made certain buying decisions and why they've said no to some, yes to others. The thing we are also always cautious about is, you mentioned intermediaries, right? And I think with intermediaries, you have to talk about business models. And what we're seeing is over the last 5 to 7 years, you're seeing venture capital subsidize margin and business model for a lot of these venture-backed companies. And I know I've sat there with, you know, groups from different forwarding teams, from different freight brokers here in North America. And there's a frustration where they say, hey, like, they're just able to undercut us and they're just funded by venture capital. And it's frustrating because they're basically giving away business. And we can't do that. We're publicly traded, or we have a private equity group. Like we just operate differently. And that's where I think at some point, these decisions are going to come home to roost. If you're in an intermediary state, a digital broker, a digital forwarder, at the end of the day, why does technology matter? Technology matters because you need to increase margin per head, right? The efficiencies of technology should allow you to ultimately do more with a lot less. And there's a development path to that, right? This is hard. I think the one thing that a lot of my more generalist VC friends have realized is freight and handling freight is not a commodity. It's actually, there's a lot of nuance around that. So you can't just zap it away. And you do need to have people around. And I think over time, the people that are around will behave like a customer success layer, right? Handle by exception, proactively if they think something might go wrong or hit a hitch. they're able to provide that care and that remediation. But kind of coming back today, you do have startups that, don't necessarily have the best business models. And I actually thought at the start of the year, as COVID set in, this would be the year of reckoning, right?
Mm-hmm.
Can you prove that you can go increase pricing and start getting your economic model to stand up, right? You have captured a meaningful amount of share, or enough share to make your investors satisfied. How do you then exert pricing and get the cash flow wheel going? And that hasn't happened yet. If anything, supply chain investments have continued to be strong relative to other sectors. So that capital spigot's still open, right? And for us as early stage investors, we look at team, but the thing that we make sure that we do is we always say, hey, listen, there's a balance between being a fundamentally sound company and growing. You don't grow at all costs, and you don't need to be so conservative that you're just going to behave like you've never raised capital before. How do you grow thoughtfully with the right plan, right? What is your land and expand model like when you come into a business? What are the proof points where you expand and start to increase pricing? Why will a customer be willing to allow you to increase price? What are the market pressures, right? How do you differentiate in the face of market pressures? So I think it's just approaching it from a different mentality. It's not growth at all costs. And
Mm-hmm.
it means sometimes you have to say no to things that might ultimately become big businesses. But part of my job as an investor is to build a process, pressure test the process constantly, and be true to that process.
And thanks for that. Do you, one thing that I've kind of seen on the startup side, and there's been some interesting actual acquisitions, particularly in the beginning of 2020, of a couple of startups in the supply chain space. That, I think of Fleet, which had started as a freight marketplace and then switched into a SaaS platform for trucking that was acquired by Expeditors, and Containers, a sales portal for companies.
Yep.
And it seems like, I think figures for a lot of those acquisitions were not necessarily released, but it seemed to be fairly low compared to what most founders would consider a huge win. And part of that might be because it was early days of COVID, but one of my reads on that might have been that a lot of these startups are actually bringing some very, very good ideas, but a large company can go out and either run a pilot with a small startup and then build it themselves if it's worthwhile, or just build it from scratch after seeing the idea. Is that something that concerns you when you invest in a startup? Just saying, like, how defensible is this? If it's a really good idea, is somebody else very, very large, can Amazon just rip this off tomorrow and do it themselves? Or do you feel like there's enough space here that a really good idea is going to succeed, even if other companies are succeeding in parallel?
Well, I think the benefit we have in general is such a big market, right?
Mm-hmm.
Like $4 or $5 trillion global market across supply chain, right? Service, transportation, international warehousing, distribution, last mile. So there's ample room for many winners, which is partly why venture capital loves this space. There's relatively low digital penetration. It's a big market, so low market penetration results in relatively disproportionately high venture returns, right? So in theory, it should be easier to build $1 billion business. But when you get into the practicalities, nothing's actually that easy.
Right. Yeah. There's a great article by Eric Johnson recently about this, just really breaking down stratification within the logistics sector and saying it's not $1 billion business. It's like 20 different, $50 million businesses, or, $500 million businesses.
Correct.
Right.
And so kind of leaning into that, when we pick apart a market, right? Like, we look practically into the market structure. Hey, forwarding might be a big market, but like, where are you actually spending your time? What is the spend amongst your target customers on average? Does that stack up to a really large market, or are you just selling kind of that headline number, right? And then furthermore, how do you practically sell? What are the structures inside an organization that make it easy for you to ramp sales quickly? Or on the flip side, it's a long sales cycle, but once you're there, retention is really high. It's a sticky product. It won't really get ripped out that easily until the next disruptor shows up, right?
Yeah, there's no safer place for a tech company than inside somebody else's ERP, right? Like once you're in an ERP, you're there forever.
Yep. But on the defensibility side, right? Like this is the perennial question from our large incumbent friends. And I generally say, listen, we all stand on the shoulders of giants. at this point. But there's been proven anecdotes where when you ask a large company to run quickly against a certain problem area, it's really hard, right? There's organizational debt, there's technical debt, and frankly, there's just kind of a lack of belief among stakeholders that a particular problem might be worth prioritizing over another. Like when you get to be a certain size, you have different motivations, you have bureaucracy, you have politics, and you lose that agileness, that nimbleness that a startup has. And that's why a startup, when you coach a startup, you start small. And that small market, in theory, is not that attractive to a company to go compete against, because it's likely not going to move the needle for them, right? They're big, they have to go fry big fish. But the idea is you start small, and over time, you expand out and you expand out. And some of the best companies have started small, and so small sometimes that investors, when they're trying to raise VC, push back and say, this doesn't feel like a big market. It feels really small. Right. But actually, if you're successful on that initial beachhead, you should be able to expand over time. And that's kind of my counter. So it's cultural in terms of a large corporate, right? But equally, startups actually start in relatively small areas that when you look initially in the early days are not that interesting and are probably shrugged off. I've had some of our portfolio companies laughed at by incumbents, and they come back a year later and say, hey, can we start a partnership or this and that? And it's like, actually, that ship sailed, you know. At this point, that window of opportunity has passed and is not as interesting for the startup party.
Gotcha. All right, and moving on here to I think one of my favorite subjects within technology is this platformification, and for people who are listening in, Ben Thompson from Stratechery is really like the be all and end all of reading about this, and for me at least, the catalyst for this right now was the recent announcements coming from Stripe, the payment processor, and how they're basically doubling down on their platform play and really connecting between more than just payment processing, but financing and a bunch of different other traditional banking functions. And this is something that I go back and forth within logistics, because on the one hand, a freight forwarder is to some extent running their own platform already, right? That this is already a industry that is mediated by a number of players. And in some cases, a customer that's booking a shipment is doing so through a couple of layers of a local broker who's maybe going through a national broker who'll be going through a co-loader in Southeast Asia who's going to an airline. And there really are so many layers already in global freight. On the same time, there's definitely players that are going after, and I think some in your portfolio as well, that are going after these aggregation plays, right? That are trying to, and you see this with LoadSmart, you see this with some other large trucking companies, absolutely, and some freight forwarders, of course, that are trying to just make a play for as much market as possible, aggregating it, and then connecting it to the same truckers that are probably getting orders on Uber Freight and from their traditional carriers as well. And I'm curious, how do you feel like this aggregation or platformification model is really translating into global freight, or is it just kind of being forced? Am I just forcing it into there? Like, how do you perceive it here?
Yeah, this is a good question. And when we were kind of doing the pre-prep last night, I pulled the slide up and just dwelling on it because it's something that I think like Ben's concept is like so salient and it's great. I think in supply chain, depending on the situation, you're going to see a little bit of both. So coming back to the stored example, they behave like an aggregator in the sense that they aggregate the long tail of warehousing supply, right? Mom and pop, owner operators. But they actually, for the shipper, it looks like a platform, right? Where they're able to bring their different stakeholders in the warehousing fulfillment segment of their supply chain and manage them through the stored cloud interface. And if you were to ask a shipper doesn't want to get into the minutia of, hey, Santosh warehouse in Tennessee manages like these SKUs for me. And then, in Georgia, it's Williams warehouse. They have these SKUs. They don't want to get into that. So they do want an aggregation experience to some degree, but equally they want some of the aspects of a platform where they can park different providers and stakeholders and manage them from a unified interface. And once they're there, the question is, how do I automate or how do I make my life easier, right? take some mental burden and decision burden off my hands.
Right.
And a few years ago, we had a team from FedEx, and they made this interesting statement. They were like, Santosh, we're up to our eyes in dashboards. What we actually want is we want people to tell us what a recommended decision should be. And if we question it, we should be able to unbundle that. So the black box per se, get rid of the black box and say, we make this recommendation because of these inputs and these factors. So we suggest you do X. And if we don't agree with X, we could say what we did and why we did it. So you're almost kind of giving that decision-making capability over to a piece of software, if you would. But around here, I don't think it's either or. I think in certain parts of supply chain, you'll see aggregation. In other parts of supply chain, you'll see like tried and true platforms, right? And we're in an inning where all the digital brokers, I think a lot of the forwarders equally are really aggregators. They're trying to figure out how to blow this thing out and become a platform. But they're aggregators because their end customers want them to be. Aggregation abstracts away complexity and liability, and in theory brings better service. We will see if that's really true or not.
Right. And it also, of course, brings with it, or maybe the driver of that better service is the data that it collects in order to feed back into that.
In theory, it's more defensible.
Right. Yes. And I think it's such a natural segue into what Amazon's doing. And I'll throw another thing on top of this, right? For 10 years or whatever, 20 years, everybody will always ask every single company, what's happening with Amazon? When is Amazon going to be taking down everybody on the international logistics side? And I think it's happening, and it's been happening. And on the flip side, that's a non-logistics or non-global freight player that's probably moving into global freight. And I think on the far end of the spectrum is Maersk, who are decidedly a global freight company that are now starting to make that push back out to other players as well. And that just like throws into this mix probably for every single startup on the global freight side that you'll speak to. Not only what is Amazon doing and what is the underlying carriers that are leveraging that same kind of idea of a platform to start to disintermediate and climb back up to the users. And that's happening, I think, from every player that owns a user. If you're a Salesforce and you own a large company and they are using you for your CRM, you're going to try to climb out and compete with a TMS. Or if you're SAP, you're going to try to climb out to that CRM and then maybe go down to the logistics side, like Logistics Business Network, which they're already doing. And how do you see these huge monoliths with huge amounts of users and logistics experience? How do you see that impacting small tech and small logistics providers? Like what is the day of reckoning going to look like here? Yeah.
So I think there's a universe where all three of these groups will be okay, right? So let's start with big tech. You're right? SAP, tried and true, long-standing ERP. I would argue best in class. We put Oracle with them. IBM, Microsoft have their products as well. Salesforce, relatively new incumbent to that pantheon. But this year, we start to hear from our portfolio, hey, Salesforce has landed into one of our customers and they're starting to pilot their PIM, their product information management module. Could you go help me figure out what that means, how we interface, how we co-op? And there's a certain type of software, that a system of record, that reference space layer. And as VCs, we're not stupid, right? Those are really, really hard to compete against. Like their values, because they're so sticky, they're the operating system of a business for all intents and purposes. The key that we think about is how do we work with them and write integrations and figure out where they are not going to compete, right? A $5 billion, $10 billion market opportunity is great for a particular startup and their VC. It might not necessarily move the needle or be a priority for somebody like an SAP or a Salesforce. Right. They might just say, hey, culturally, we don't prioritize that. We don't have the resources. And they might say one day, wake up and say, hey, we're willing to buy that. So Coupa bought LlamaSoft, right? There could have been an argument that, hey, somebody else could have built a LlamaSoft, but actually that decision was, we'd rather buy versus build. And we will bolt that on to the giant platform and we'll continue to get bigger and bigger and bigger. Right. Now, the risk down the road is that these bolt-ons occur on these long-standing pieces of software And are we 20, 30, 40 years down the line inhibiting innovation, right? And that's probably a different type of conversation. Big logistics.
Right.
I think big logistics and Amazon have had a very contentious relationship over the past 5, 7, 10 years.
And we it's all only going to get worse, probably.
It's only going to get worse. It's only going to get worse. And but equally, like I have a cohort of executives who tell me in closed doors, this might be the best thing to happen to our business. I was like, really? You think so? And it's a different, unique spin because they go, there's always freight and we have an open relationship and, we've arranged this and that. But I have other executives say, hey, we have revenue limits on them, 20%, 30%. Right. And by the way, we just hired an entire sales team to diversify our revenue away from Amazon. So while one side runs and hugs them, gives them best service, you have the other side that's just running as fast as possible. But the interesting thing, what we're talking about is they're creating a forcing function where people can no longer sit on their laurels and say, we've had these relationships for 30 years, right? This is how we've always done something. Well, really, because the data says opposite. The data says our carrier selection should be this versus that. Or why are we routing this type of freight through these particular lanes? Because, by the way, we hit delays, we hit service problems. What if we put some software in to figure out how we remediate this? And Amazon's like raising these questions, right? Just these basic fundamental questions. Why are you doing X? And they are creating change. And I think you brought up Maersk earlier. I think Maersk is a great example of a big logistics company that's saw the change and is being proactive in saying, how do we fundamentally diversify and change our business model, become the integrator, right?
Right.
And they're big investors in LoadSmart. We're not. Ricardo's super smart guy. Suna, Yepe at Maersk, super astute investors. And they're basically thinking about, hey, like what are the end markets that we need to serve as Maersk? And how can we in turn lean into this integrator relationship or this integrator platform we're trying to build? And I'd be shocked in the next decade if you don't see Maersk alongside UPS, FedEx, DHL when we talk about the big global supply chain names. I'd be shocked.
Absolutely. And I think, at the same time with Amazon, we're definitely at this area where tech companies are starting to unbundle the Amazon ideas. Companies like Deliver that are literally trying to replicate that Amazon experience outside of the Amazon ecosystem, which is probably driving a certain degree of innovation as well. But yeah, super interesting to watch. I do want to be conscious of the time, and now we have about a minute or two left. So I'm just going to skip to one or two questions that came up a couple of times before we started here. Do you have any particular guidance for corporate industry investors that are looking to hedge logistics technology plays?
So these are CVCs in particular.
Yep.
Well, I think for one, when we sit down and chat with our CVCs, it's understanding the mandate. And you have a lot of CVCs these days who have a financial return mandate, right? They personally benefit when there's actual capital return. And a lot of them equally are responsible for some type of innovation function. And the hedge, the way you think about the hedge, provided you've sized the capital appropriately, right? Because as a VC, you're still making a high risk bet. There's a high probability that capital will be permanently impaired. Mm-hmm. That's just the nature of innovation. But the thing to walk away with, the hedge per se, is being open to mistakes and learning from mistakes, right? And championing that, hey, this didn't work out, but we're about to go pick the thing apart and do a postmortem so we never make this type of a decision again, right? That's where I think when there's this whole concept of corporate and startup engagement, it's actually around knowledge share. So to your point earlier, how do you make decisions like a startup, right? Okay, so that means we have to pull a pod out of the mothership, put them somewhere by themselves, not bother them. And you'll realize that autonomy creates a lot of interesting benefits around corporate culture and how fast you can run and solve problems. So it's really around knowledge shares where I would say a hedge exists, right? Provided you size the capital and you're comfortable with that capital at risk and at play.
Yeah. And I think one thing that I from my own experience, just for one additional thing on that, is that sometimes a $2, $3, $4, or $5 million check is the cheapest possible way you can validate something, without building it internally. It could be like orders of magnitude of a smaller mistake or experiment than anything else. And I think that's definitely something that we've seen take place with a couple of different companies. Sorry.
So around like ROI, like, because we'll get asked like, how do you calculate ROI? Because knowledge returns, it's such an abstract thing. It's like that right there, what you said, Ethan, right?
Yeah.
Okay, like what does it cost to go experiment and build it? And the time around that and the relative urgency, okay, it just makes way more sense to either make an investment in maybe a Series A or Series B company that's a bit more mature, but equally just do a pilot, do a $50,000 pilot, have the success metrics, and you'll be surprised how much a startup will run towards you and want to delight you and equally benefit from that relationship financially and through their entire sales process.
Yeah, which I think also replicate, you're talking about Maersk before and the investors there. And I think that exactly the Maersk strategy is things that you need to do, build it yourself or buy it with a large acquisition, everything else, diversify with smaller investments and use that as your experimentation or possibly scale it up a little bit later on. We did have a bunch of other questions, but I do think we're out of time right now. So Santosh, I do want to thank you so much for this. This was a very interesting conversation, taking us a little bit out of the nitty gritty and going out towards the big picture. So thank you so much for coming on. I really appreciate it.
Appreciate it. Thank you. Thanks for having me.
Thank you. And everybody else, thank you so much for tuning in. We'll be kicking this off again beginning of next year. Got some other very, very interesting speakers lined up from large ocean liners, logistics providers, and a couple of other folks in the tech sector. So thanks so much. Happy holidays. Take care of yourself, and I will see you next time.